Climate change tests the insurance industry and could lead to the next big economic shock for the U.S. For Diane Wolf and many of her neighbors in the quaint, wooded hills of Berkeley, California, a climate change reckoning is underway. We've been here 26 years, and had car, home umbrella insurance with AAA. Wolf, faculty assistant to the Vice Provost of Academic Affairs at the University of California, Davis, told Yahoo News. We got a notice last spring that we wouldn't be renewed because we didn't have fire insurance. Wolf and her husband acted quickly, securing additional fire insurance coverage for roughly $7,000 a year, but AAA then embarked on a full policy review that required an inspection of the property. This has been a common occurrence in California, a state that has endured 16 of the 19 wildfires in U.S. history that have resulted in losses over $1 billion. As opposed to just renewing us as old clients, they cited all kinds of problems: a wire hanging, the age of the roof, a bump in the sidewalk caused by the roots of a tree, a lopsided gate, a lack of outdoor hand railings, and then threatened to decline coverage, she said. Wolf approached California's insurer of last resort, the FAIR Plan, which offers subsidized coverage when private companies won't, but it responded with a similar list of required upgrades. Faced with losing coverage at a time when insurers are either not writing new California policies or have been raising rates dramatically to account for the increased risks posed by climate change, Wolf went ahead with the repairs, which she said cost $60,000. That's a big chunk of change for us, Wolf, 70, said, adding, "We have minimal coverage now, but we were lucky. My neighbors were dropped without any warning." Earlier this month, Senate Budget Committee Chairman Sheldon Whitehouse of Rhode Island held a series of meetings in Florida on the topic of skyrocketing insurance rates. At a panel discussion in Hollywood, he issued a dire warning about what he called the next big economic shock that is going to clobber the U.S. economy. With insurance becoming unaffordable or unavailable, Whitehouse said, the next shoe to drop is the mortgage market going into crisis, because if a property is uninsurable, that property is unmortgageable. And then that mortgage crisis cascades into a property values crash. No state has been hit harder by the unfolding insurance crisis than Florida, a peninsular bullseye consisting of 8,436 miles of heavily developed coastline that each year tempts hurricanes and tropical storms. Residents in Florida pay 4 times the national average for homeowners insurance, and the cost of premiums has risen there by more than 40% over the past year and a half. That's no real surprise given that in 2022, a single storm, Hurricane Ian, killed 150 people and caused a record $112 billion in damages when it made landfall on the Gulf Coast.